Market-linked products typically invest in a diversified portfolio of assets which may include equities, fixed income, or other investments. The growth potential depends on the performance of these underlying assets. Is LIC Nivesh Plus a good investment product considering your financial goals? In this video, let us do a detailed analysis of LIC Nivesh Plus. With this research analysis, you can make an informed decision regarding wealth creation. Welcome to holisticinvestment.in. LIC Nivesh Plus is a unit-linked, non-participating, single-premium individual life insurance plan. First, we shall look at the features. There are two variants. Option 1, 1.25 times of single premium. Option 2, 10 times of single premium. There are 4 fund options available. Guaranteed additions offered after a specific duration enhance the fund value. Next, we shall look at the benefits. Death benefit, basic sum assured, less partial withdrawals, or unit fund value, whichever is higher is payable. Maturity benefit, unit fund value shall be payable. Now we shall look at the funds available. The allocated premium will be utilized to buy units from the chosen fund by the policyholder out of the 4 fund options available. They are bond fund, secured fund, balanced fund, and growth fund. The table here depicts the various types of fund options and their investment patterns. The risk profile varies for each fund. You should make sure that your fund's risk profile should match your risk appetite. Now we shall look at the various charges under LIC Nivesh Plus plan. Premium allocation charge, it ranges from 1.5% to 3.33%. Mortality charges, it depends on the age of the life assured. Accident benefit charge, if the benefit rider has been opted, then this charge will apply. Fund management charge, 1.35% per annum for all the 4 funds. Switching charge, only 4 free switches are available within a policy year. Over and above, ₹100 per switch. Partial withdrawal charge, a flat amount of ₹100 shall be deducted. Discontinuance charge, it depends on the year of discontinuance and the premium amount. Miscellaneous charge, a flat amount of ₹100 will be deducted for any alteration. Inference from these charges. The above charges are part and parcel of LIC Nivesh Plus plan. In general, other market-linked products do not levy these types of charges under different heads. In other market-linked products, other than expense ratio, they don't levy any charge and their investment process is very transparent. So the charges for switching, partial withdrawal, and discontinuance is a burden to an investor. Now we shall analyze the advantages and disadvantages of LIC Nivesh Plus. Advantages: guaranteed addition, accidental death benefit rider, partial withdrawals, 4 free switches, and using the settlement option you can receive the death benefit in installment. Disadvantages: no top-up shall be allowed under the plan. The lock-in period is 5 years. No loan shall be allowed under the plan. It is crucial to carefully assess the product's performance before investing. Market-linked products provide exposure to the financial market, but their potential returns might vary. Let us now calculate the potential return of LIC Nivesh Plus. Following is the benefit illustration taken from the sales brochure of LIC Nivesh Plus. Mr. A, who is 30 years old, purchases LIC Nivesh Plus for 1 lakh for a policy term of 20 years. He chooses plan option 2, that is 10 times the single premium. At the end of 20 years, he receives the fund value. It is assumed that the projected investment rate of return that LIC will be able to earn throughout the policy term will be 4% per annum or 8% per annum. The projected investment rate of return is not guaranteed. The fund value at assumed gross return of 4% is 1.08 lakhs and the return shall be 0.8%. The fund value at assumed gross return of 8% is 2.67 lakhs and the return shall be 5.32%. Even if you park your lump sum in a bank fixed deposit at an average interest rate of 6%, the amount doubles in 12 years. The returns from LIC Nivesh Plus is lower than any debt instrument. The risk and return are not proportionate. For wealth creation in the long run, you need a better risk-adjusted return. So, investing in LIC Nivesh Plus will not generate substantial returns in the long run. Investing in ULIPs offer an opportunity to invest in the market. At the same time, you get tax benefit for the amount invested. Now, let us look for an alternate investments where you get an opportunity to invest in the market as well as tax advantage. Apart from that, we need to look for life cover. Equity Linked Savings Scheme (ELSS) is a mutual fund scheme that is a market-linked product offering tax benefit. For life cover, let us take a pure term life insurance policy. A pure term policy for a sum assured of ₹10 lakhs would cost 44,500, which is a single premium. The policy term is 20 years. Out of ₹1 lakh, the balance 55,500 is invested in ELSS fund. At the end of 20 years, while exiting the ELSS fund, capital gains tax arise. Let us set aside aside the tax payable from the maturity proceeds. The tax calculation is given here. The post-tax fund value is 4.97 lakhs. The IRR for this cash flow is 8.81%. In this alternate arrangement, you get life cover, participation in the market, and tax benefit. Also, the returns from this alternate investment is more than the inflation rate. That means that with this accumulated fund value, you can easily meet the inflated cost of your goals. Under LIC Nivesh Plus plan, you may fall short of your goals. Please make a note of one more important point. In the budget 2021, the government announced that proceeds from ULIP shall be taxable if the annual premium exceeds 2.5 lakh in any year of the term of the policy. Here is our final verdict on LIC Nivesh Plus. Certainly, investing in market-linked products help you in wealth creation process when compared to fixed instruments. LIC Nivesh Plus has 4 different fund options catering to your risk appetite. It also offers the flexibility to invest either in equity or debt funds depending upon your risk appetite. Investors who are ready to take risk should analyze the alpha generated by the product. Better risk-adjusted return is essential for wealth creation in the long run, which is missing in LIC Nivesh Plus. The major reason for poor return is mainly due to the charges under this plan. Charges under the plan includes charges for switching, withdrawal, and surrender, etc. You may not find these charges in any other market-linked product. These charges pull down your overall return of the policy. It is essential for you to align your investment choice with your risk tolerance, investment goals, and time horizon so that you can make informed decision regarding wealth creation. Consulting a financial advisor will be beneficial for you in choosing the right market-linked product for your needs. A detailed review of LIC Nivesh Plus plan is available as a blog post in our website, and the link is given in the description. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming enlightening investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.